Good afternoon, everybody. Good afternoon, and welcome to the next in the ActivTrades Monday Market Matters webinar for the 18th of September. We're going to be talking about how to trade the British pound sterling. It's Paul here, FX trader Paul there. Firstly, we've had a couple of challenges with software over the last month or two. I just wanted to check, can you see the slides for those of you here joining us? And more importantly at the moment, can you actually hear my voice? If you could put that in the chat box, that would be a great start for us, ladies and gentlemen, just so we're able to start off on the right foot, because we've got lots to talk about and lots to cover today. Peter says he can hear. It's all good. Fabulous, Peter. Thank you. Thank you very much. And welcome to everybody here. I appreciate that, as always. Whilst these are the English desk webinars, we appreciate we have a truly global audience. So it's great to see so many people here from all over the world. Wherever you're joining us from, we here at ActivTrades, we hope that you're having a good year, okay, and markets are treating you well in what has been a rather interesting year and what will undoubtedly be a rather interesting remainder of the year 2023 when it comes to engaging with markets. So let's talk about what we're going to talk about here today. We're going to always have our own normal introduction to Monday Market Matters and have a little look at the news in what is likely to be a rather interesting and chunky data week. But we want to talk about, in terms of the educational element, what do traders need to be aware of when trading the British pound sterling? What are the pros and cons of trading GBP? And what are the kind of simple setups we can use when trading the GBP? And I'll also provide a very simple mechanical breakout strategy for the British pound sterling at the end of the session. So be sure to stay with us to the end. And then, as always, what we'll do is we'll check on the live markets as we go into the start of the US session, which is in about 25 minutes time. It would be interesting to know, of those of you joining us here today, if you could put it in the chat box, what has been your experience of trading the British pound? Maybe you have no experience, maybe you're at the start of your journey, or maybe you're just at the start of trading FX markets. That's absolutely fine. No bother, that's what these sessions are here for. Or alternatively, maybe you have a lot of experience of trading British pound. Maybe it's one of your main asset classes that, and it would be good to know what your experience has been. So if you could put some of those details in the chat box, I'd really appreciate it. It helps me sort of just understand where I can best focus my time and energy today. For those who don't know me, my name's Paul. So I've traded for many years, traded for funds, traded for clients. Primarily, I like to focus on FX indices and commodities, and within that, I like to focus on sterling, especially on an intraday basis. For my longer term trading, I tend to be a trend trader for swing and position trading. And I tend to be a reversal trader for sort of shorter term intraday and scalping trades, all of which will sort of play out today as we talk about trading the GBP. But before we get there, if you're joining us for the first time, Monday Market Matters, our webinar here, every Monday, 2 p.m. London time. Whole idea being that, we just help traders get in the right frame for the start of the trading week. Just as I said, just as we get ready for the opening of US markets. So we'll always have a little look at what the news is coming up this particular week. Main element will be on education. Okay, so today we're going to talk about trading the GBP. We'll always have a chat about the ActivTrades platforms and tools that you have available. And we always finish off with a look at the live markets as we start into the US session itself. So always trying to cram as much as we can into our hour here on a Monday afternoon, and let's crack on with a look at the news and what we have to deal with for this coming week. You'll hear me, those of you who've joined us regularly, you'll hear me that I will always talk about, if you're a new trader, I don't expect you to be able to analyze every bit of news data, but it is important that you know when that news is coming out, because that, especially for the high level sort of pieces of news that will induce volatility before the news, at the news, after the news, all of which can, disrupt your trade plans if you're not aware of it. And really, there's no excuse not to be aware of them these days. There is a economic calendar on the ActivTrades platform, which you can utilize, and there are other ones on the internet. So you can find out exactly when the big high element news are coming out. You will also find that the ActivTrades team of analysts, who will send you a regular update on almost a daily basis, but also at the start of the week to send you just a little piece on the the news coming up and their particular take on the major elements. So if you're not signed up to that, make sure you are, because it can help you just effectively understand the week ahead and plan what is coming. So we have quite a chunky data week, as I said, quite a lot coming out, and a lot of which may well determine our sort of future direction for the next kind of few weeks, months, maybe towards the end of the year. In particular, whilst people will be interested today in sort of the data, US data on the housing market, personally, what I'd be interested is, as you can see there, tomorrow we've got the Royal Bank of Australia publishing its minutes, but we'll also be looking at the Canadian CPI data, all right, along with the Japanese trade building. And then I think it's Wednesday when we start to get really interesting in terms of locally, for let's say for me here in the UK, but also globally in terms of interest from global markets. Because namely on Wednesday, we have the UK inflation CPI data comes out. There's also data from Bank of Canada, etc. But on the Wednesday evening, if you're here in UK and Europe, but we also have the Fed meets for the direction of its monetary policy, as you can see there. And whilst most people are expecting there to be no movement from the Fed this week, many people will be interested to see, what the tone of the messaging around that in terms of whether there will be more rate hikes, and if so, when they will happen, and also the general trajectory of interest rates for the US, and that will have a huge impact on all global markets, and so there'll be intense interest in that. And then on Thursday, we have the Bank of England has their meeting on monetary policy, and most people have kind of baked in or expecting a 0.25% rate hike there. So invariably, talk about trading news is all about expectations. Were they not to raise rates on Thursday, that would be the kind of the interesting point, and that would bring about increased volatility, certainly in the sterling pairs, which is something that is of relevance based upon what we're going to talk about for the remainder of the session. So that will have an impact. There's also the Swiss have their monetary policy. People are expecting them to raise by 0.25%, but you can also see there is data there from the US Fed manufacturing and Japanese inflation figures are also available. And then on Friday, the Japanese have their monetary policy, and whilst nobody's really expecting a change this week, lots of people will be interested in the comments from the Bank of Japan, especially based upon the comments that the governor, Mr. Ueda, said at the G20 meeting a couple of weekends ago. But what will also be very interesting is that we have a host of flash manufacturing and services PMI data for Europe, UK, Canada, US, etc., and other areas. But those are the ones that will be of main interest for traders sort of engaged in major markets. And so, as I said, there is a huge amount of data coming out this week, and so markets may get bullied left and right, as they react to those bits of data. And as I said, as a new trader, it can be a little bit overwhelming, perhaps intimidating. And so hence why an economic calendar is your friend. Make sure that you're on top of your economic calendar. Make sure you know what is the major data coming out for for that particular session that you're sitting down to trade. It can be very, very important. And for those of you experienced traders, well, there will be lots of opportunity there. You just have to make sure you keep your powder dry in order to engage with the right ones for you. So lots of data, lots of it which will have an impact on British pound sterling. So that all has an impact with what we're going to talk about for our educational element today. So let's talk about trading the GBP. And, as I said earlier, GBP may be a new asset class to you. Maybe it's your favorite, like it might well be for myself. But as the slide says, all right, due to the nature of London remaining the world's #1 location for exchange trading, there remains a lot of interest in trading the great British pound sterling. And so what I'm going to do in this particular session is just shed a little bit of light on some specific sterling traits that traders should be taking into consideration when they're looking to engage with markets. So in this session here, in the education elements, we'll discuss trading the GBP and what traders need to be aware of when engaging with British pound in their own trading endeavors. So as I said there earlier, it'd be interesting to know, in the chat box, how many of you trade sterling already at the moment? Is it part of your basket of currencies, or is it something that you've never traded before? Okay, and both answers fine. It's these sessions are here to help traders of all age, all experience, all focus in order to be the best trader they possibly can be. But as I said, I started out trading GBP, and effectively that has remained my main focus, my main thruster, right? And even though I trade other asset classes in terms of indices, commodities, and we'll trade other FX pairs, the sterling, especially on the intraday basis, still has a huge hold for me in terms of the way I look to operate, and we will have a little look at that later today, or later in this session rather. So let's have a look. So for those of you who are completely new to trading, completely new to sort of any engagement markets, GBP, Great British Pound, is the UK's currency and is also known as sterling. So you will probably hear me interchange, in this session just between GBP, Great British Pound and sterling, just so you're aware. It does trade 24/5, but what I would suggest is the main hours are UK hours of 0800 to 1600, 8 in the morning till 4 p.m. And as I said, because it's the FX market, you will find that we will trade the 24 hours from what would effectively be sort of the opening of markets in the Pacific Asia region on what would be a Sunday evening for me here in the UK, and that will travel through to sort of about 9-10 p.m. on a Friday night when the American markets close on a Friday. But as I said, the main hours are 0800 600, and actually I would even suggest that perhaps most sterling traders they focus on the early morning European session. So when the majority of, let's say, institutional FX traders are getting to their desk sort of for in time for 8 o'clock or in the morning London time, that sort of early morning session there is where the vast majority of British pound sterling trading is done. It's not to say you can't do it at other times. It's not to say you can't do it in your, let's say, your afternoon into the US session. You will find that happens. But most, not unsurprisingly, most sterling traders would focus on that early morning session in terms of the early morning London session. We will have a look at in a couple of slides' time. So when we start to look at British pound, what is it that makes it special? Why should it be of any interest to us in a world where we have some good movements in both the dollar and all of the other FX majors, but also in many of the minors and the exotics within the FX world? Okay, there are, if you are trading FX markets, you are not short of both specific assets but also individual instruments and to basically engage with. So what is it that makes pound special? So and I may well be a little bit biased because that's where my experience is, but I believe in terms of what makes it special is what is useful and valid to everybody in trading. Firstly, there is an element of good element of volatility within British pound, and volatility, you will hear me talk about, it's a double-edged sword. Lots of people talk about it, but it's about, as I said, it's a double-edged sword. So when you're on the right side of the volatility, well, then invariably it can be the wind within your sails. When you're on the wrong side of volatility, well, then that can make your trading session a little bit challenging. So part of that is about understanding that volatility and understanding that what it can do with sterling is give us some strong trends from time to time, and we will have a look at that on the live charts. But what we can also get is quite sudden reversals. Now, my own particular view of that would be that there are some great reversals that set up on the British pound, but perhaps they are not as volatile and as extreme as they were a couple of years ago when we were going through the whole sort of Brexit debate here in the UK. So in that time, reversals could happen on a sixpence simply because of some political commentary. That has pretty much removed itself, I'd say, over the last year or so. But invariably, that still does mean we can get reversals if there is some information about that, or we get a good normal solid technical reversal pattern. It also provides us with a good-sized ATR average true range, okay? And whilst that might have come down over the years, it is still not unusual to see, certainly, across some of the major UK sterling crosses, so things like pound against US dollar, pound against yen, pound against Swiss franc, etc. You might well see average true range of anywhere between 80 to 150 pips, depending upon the individual there, which provides opportunities for certainly for scalpers and intraday traders to engage in that particular market. What is also useful to us is in terms of sterling, and in particular risk sentiment, sterling would be declaimed to be sensitive to risk and fares better in a risk on sentiment. And we've talked a little bit about in the past for new traders trying to understand what you might call the kind of the row environment and whether the overall market is in a risk on or risk off environment. That for new traders can be very, very beneficial. If you don't understand that, I think the video that I did on that should be on the ActivTrades webinar archive on the website, so be sure to check that out. But generally, sterling sits in the risk-on camp, all right. Namely, that when there is a risk-on mentality in markets, that tends to play out well for sterling, as opposed to the risk-off, where we see risk-off, when we will very often see moves towards Swiss franc, Japanese yen, and US dollar, depending upon the experience. Right. In terms of fundamentals, what I'll be saying is that I personally believe we have long moved past that kind of the Brexit news and moves, which were providing the sudden reversals I talked about earlier. There is still the element, okay, of pieces that come out, okay, normally sort of driven by, let's say, political commentary that might be talking about elements of it which may sort of dull the sentiment, okay, or enhance the sentiment for British pound sterling. But personally, I think what is probably more relevant to traders these days is what, if any, confidence they have in the Bank of England, and in particular Mr. Bailey. I think most sort of analysts and most sort of particular active traders would probably suggest that they've been somewhat disappointed, okay, firstly with Mr. Carney and then with Mr. Bailey in terms of the head of the Bank of England. Certainly, and let's say in talk about recent times over the last sort of, let's say, 18 months, etc., the general feeling has been is that the Bank of England was out of touch with regards to the cost of living crisis. They were behind the drag curve in terms of recognising that inflation was rising and that interest rate rises would have to occur. They were slow. They were seen to be late to the party, especially compared to the US Federal Reserve, and all of that sort of knocks confidence in Mr. Bailey and overall in the Bank of England itself. And that confidence is one of the things that plays through into the, let's say, the sort of the sentiment, the risk sentiment around British pound sterling. So I do recognise that there might be some analysts who think the Bank of England and Mr. Bailey have done exceptionally well. I can only merely talk as someone from an active trader in British pound, and reflect the views of other active traders in that. So all of that has an impact on the kind of volatility within the British pound. And as I said, it's that volatility that helps generate the kind of the interest and the sort of, let's say, the demand to trade within the sort of the pound asset class. So when it comes to looking at what makes GBP special and how we can engage with it, well, let me bring up the whole drawing tool here. It's what we can look at is that we can trade the GBP against the, let's call them the major other FX pairs. So in particular, of course, the US dollar. We can see there here, okay, which is you'll hear for those of you who are new, very often you will hear basically new traders will hear FX traders talking about the pound against US dollars as cable. Cable is kind of like a nickname for pound against US dollar. It's referenced to the, let's say, the undersea cable that was laid between New York and London in effort to effectively trade prices in sterling, dollar, and other asset classes. And so you'll quite often hear traders talk about the trading the cable. Also, pound against the Japanese yen, and I have a profile here. So that is my pound against US dollar. This is my pound against yen. So lots of people will have quite a few nicknames for trading the pound against the yen. Not always the prettiest of nicknames, and mainly that was due to, certainly in, let's say, the olden days, the real volatility that was seen between the pound against the yen, and in sort of decades past, you might actually see volatility on a daily basis somewhere between 150 to 250, 300 pips in terms of the pound against the yen. And as I said, when it comes to volatility is great when you're on the right side of it, but can be challenging when you're on the wrong side of it. Okay, and so lots of people would have done very well trading pound against the yen because of that volatility. Other people may have had some challenges trading pound against the yen because of that challenge. On the other side of the coin, we have the euro against the British pound sterling, and invariably that was always quite. Whereas pound against yen was very volatile and had really great average ranges on a daily basis, the euro against the sterling was quite the opposite. Right, and many years ago, it wouldn't be a shock to maybe have a 30 to 50 pip sort of range on the euro against sterling. That average range expanded in the run up to Brexit and post Brexit, but now is effectively we've got that average range has decreased again in terms of both what we see on a daily basis, but also the ranges within euro sterling tends to trade, and that is probably easier to explain when we look at that chart in a moment's time. On the flip side of euro against sterling, you can see the pound against the Swiss franc, and very often what would happen is that we would see sort of in the past, we would see euro sterling and pound Swiss having a very strong inverse correlation. That is still there, but I would suggest that correlation is not as strong as it once was. And pound against Swiss can be traded on its own on its own basis, quite simply. I remember what I was saying is that sterling is seen as a risk on asset, okay, it's a risk on trade, whereas Swiss franc is normally seen as the risk off trade and stuff, and so that can be quite an effective reference point, okay, along with pound against yen in terms of recognizing whether we're in a risk on or risk on environment. What we also find is sterling trading against the com dollars, okay, against the pound against the Aussie, pound against the New Zealand, and pound against the Canadian dollar. Now, the interesting thing about these is that many people would say those com dollars, they are also risk-on currencies in the same way sterling is. So what it can mean is that we can get elements of volatility, but equally when there is a risk-off sentiment, well, what we might see is that we might see the volatility reduce a great deal, okay, in terms of trades of sterling against Aussie, Kiwi, and Canadian dollar. So as I said, pound against yen and pound against Swiss franc, looking at those can give us an indication of understanding the overall risk on or risk off sentiment of the markets. And Aussie, Kiwi, and Canadian dollar are most definitely, they are risk on currency. So when everything is risk on, that is when you might see variations of volatility in those. But once again, it's a little bit easier to show when we look at the live market at the moment. You will also find that there are available lots of other sterling exotic pairs to trade, okay, in terms of the FX markets. Whilst they are there, and many of them are available on ActivTrades platforms, I tend to focus on trading the sterling against what I would define as the kind of the major and the minors. And my reason for that is because I know that there is good volatility, good liquidity. There is also great research available on that, and also the kind of the spreads on those tend to be the lowest of it, which is as you go on in your trading business, that is a cost of business that you want to be particularly aware of. So, when we look at sterling, okay, and we look at how we can engage with it and what it brings to the party, well, are there any specific elements we need to be aware of in terms of analysing the GBP? And yes, there are, and we'll talk about those in a couple of slides' time. But the reality is that regardless of what you trade, whether you're trading indices, whether you're trading commodities, whether you're trading crypto, whether you're trading dollar or sterling or any other FX pair, you will always hear me talk about having a very simple routine that you should be following, and almost until it becomes almost like automatic, because that is what will help you with your own particular trading. So you'll always hear me talking about, regardless of what you're in trading, if you're looking at sterling, you want to be identifying levels of support and resistance on the monthly, the weekly, and the daily chart. Even if you are focused on intraday trading, you'd still want those particular levels in place, because you want to basically be aware of areas where markets will be making decisions. You don't want to be, at the start of your trading career, getting caught by buying into resistance or selling into support. Okay, and so by drawing these on at the higher levels, they can give you guidelines and identify areas where markets may well be volatile, because there's invariably it's an area on the chart where the market is looking to make a decision. Normally, we want to identify if there is a present trend, and you'll hear me say it every week. Okay, good trends leap off the chart at Euro. You don't need to force that. If you are forcing it, then the likelihood is the trend is not there. My suggestion for new traders, okay, looking to join into trading and an introduction into trading, FX and GBP, is that my normal suggestion is that for your swing trading, and for my view for swing trading, and that would be anything that's going to be open for a few hours to a few days to a week, maybe 2 weeks. Okay, I would be looking where ideally you want to be looking to trade with those trend, right? And you will find across the sterling pairs that there are opportunities for some very nice swing trades. And I would suggest just on the even on the 4-hour chart, you'll find that there will be a couple of nice trends. And as you develop and evolve in terms of your sophistication as an FX trader, certainly for me, what helps is that I have a look at understanding the overall strength v weakness within FX markets and where the sterling sits in that. So over most of this summer, okay, maybe kind of the early part of this summer, sort of May, June, July time, the sterling was very strong against other currencies, and so it effectively you were motivated to basically trade trend swing positions, with a case of basically trading in line with sterling strength against some of the other weaker currencies, which in particular was things like Japanese yen, etc. What I would also say is that if there is no trend, well, then I would be looking for sort of trade reversals and mean reversion for day trades and intraday trades. So, if there is a very clear trend, well, then I want to sort of trade with it. The challenge we have is that markets generally only tend to trend for maybe 20 to 30% of the time. So, it's a case of we might like and want to join the trend, but there may simply not be a trend there. And as I always say, good trends leap off the chart here. So if there is no trend, well, then we're looking at trading reversals, okay, or mean reversion, especially on an intraday basis. And I'll have a little look at what was shown on sterling for me this morning, okay, as a way and means to sort of explain that better. So I thought, just to help us just make a little bit, get a little bit clear on that, okay, and help new traders just get a grasp of, how they could engage with pound sterling, is that one, right, identify if there is a present trend. So here we go. I've got on here just euro against sterling on the 4-hour chart, pound against dollar on the 4-hour chart. Okay, and these from like a little bit earlier in the summer, and hopefully what we can see is that in this particular case, we had effectively euro against the sterling at that particular couple of weeks. We were an uptrend. Price was making higher highs, higher lows. Okay, we were above the 20, the 50, the 200, which were all fanning out. And on the flip side, okay, the pound against the US dollar was variably making in a downtrend. Okay, making lower lows. Okay, lower highs as it basically moved its way down, or even as it pulled back to continue. Okay, so as I said, if there is a present trend, that's ideally for us, okay, in a way to sort of swing trade those at. Personally, okay, I know some people like to trade breakouts. Personally, I like to trade pullbacks. So in that particular case, let's just get these drawings clear. Was invariably, as we could see, the price was coming out when it was pulling back into areas of support, and here in the moving average, that was an opportunity, okay, to take a trade in the direction of that. Equally, as price was moving its way down, as it pulled back to the 50-period moving average and started putting in price action, that was the opportunity to trade in the direction. So, I'll be looking for a trend, then looking for a pullback, and then utilizing just price action candlesticks to give me the trigger. So it's about understanding context, pattern, and trigger. That's me. And I think sometimes new traders, they get a little bit caught up on the pattern. Okay, just want to trade the pattern, but you have to understand what is the context, and you also have to understand what is the trigger for you in that term. Okay, and that will be something we'll look at a little bit more in depth in terms of triggers in another session. For here, I would just want you to be able to understand, well, when we see there's a trend in British pound sterling, my view would be to look for pullbacks. Okay, now I do appreciate that. I do appreciate that there are lots of traders who would actually like to prefer to trade breakouts, and that's absolutely fine. I'm not to say that breakouts aren't aren't available. It's just my personal experience, and this, as I said, this is my personal trading experience within the FX markets, and certainly within the lower time frames on the FX markets, there are lots of false breakouts, lots of fake outs, which in its way is a trading setup for myself. And so if you are going to trade breakouts, you need to have a very good, simple, robust way to trade breakouts generally. Okay, it's a case of when it does break out, and when it does break out well, then you need to be on it, and B, you need to look at ways to be able to add to that position to make it work best for yourself. As I said, other people might choose to trade breakouts in a different way, but that would be my guidance based upon my own experience of watching and trading these markets for many years. On the flip side, as I was saying, if there is no trend present, okay, if we can see that markets are just consolidating and going sideways, as I said, that is when I particularly like to look at trading kind of reversals or mean reversion setups on an intraday basis. So, as I was talking about before, my belief is that there are more false breakouts than positive breakouts within FX markets, and one of those is false breakouts of the Asian range is one of my own particular personal favorites. Also looking for things like very simple reversal patterns. So that could be something like a double top or a double bottom, or a triple top or a triple bottom, or even maybe a head and shoulders pattern, or an inverse head and shoulders pattern. Okay, and then what I'm looking for is mean reversion, and that basically means I'm expecting price to blow out of the Asian range, okay, and then come back into it. So here on this is what pound against yen on the 15-minute chart, euro against sterling on the 15-minute chart. They kind of, this grey box that you can see here, that's the kind of consolidation of the overnight Asian range. And what maybe you can see is price breaks out of it, and then it puts in rejection candles before it drops back into the middle of that range. And every time it comes back up, okay, it rejects that range and comes back in, comes back out, rejects, comes back in before it actually makes a particular move. And on the euro sterling, it comes down here, it comes actually down out of the Asian range and rejects it on a double bottom before actually it goes up, rejects it. It goes further, rejects it with price action before actually we get, maybe you can see that is there's the kind of the head and shoulders pattern there. So a simple, you've got two reversal patterns there, a double bottom there and a head and shoulders pattern there. So as I said, if there is no very clear trend present, on maybe the sort of the higher time frames, it's not a surprise to see, price just being able to sort of, have lots of false breakouts. Okay, so I'm always looking to sort of trade reversals and mean reversion in line with that, and that has been my experience. If there is, for new traders, if there is a trend, well, we want to swing trend with that, and you ideally want to basically be looking to buy pullbacks in clear ranges, or alternatively, if there is no very clear trend, if it is struggling a bit, well then actually what I'm looking for is is reversals as part of an overall mean reversion strategy for price to sort of push out of ranges of consolidation and then pull its way back in. So that gives me two very simple yet clear ways to operate in markets. If there's a trend, run with it. If there isn't, okay, just trade mean reversion. That's the way I like to operate. And of course, you can go into that in far more depth. And you can create some very, very strict and very strong rules about that. But if you're a new trader starting out, that is a good, simple way to just position yourself. Okay, so at the start of the day with your routine, you'll be looking at, right, is there a general trend in sterling? You might see it across all the board if there's a general trend. Okay, in which case you certainly wouldn't want to be fighting that, but then you might just see individual trades based upon the strength or weakness that might be exhibiting in the overall FX market. In one case, you don't want to fight that, you want to ride with that. But as I said, if there isn't any trend present, well, then we're looking at, well, okay, I'm expecting price to consolidate, I'm expecting price to mean revert, and if there is a reversal set up as part of that, well, then that's the way I'm looking to operate. So it gives you a little bit of a bias at the start of your day. Okay, am I in a trending environment or am I in a consolidating environment? And of course, that doesn't mean that you can't have been in a consolidating environment and for price to suddenly break out and start a new trend. That is very possible, especially if there is, significant news or change in news, okay, that can have an impact on that. And not also can markets be in a very nice trend, but then go into a consolidation period as people start to sort of take profits, okay, or the volatility reduces in front of, let's say, some very big news. So, for example, as I was saying, this week, we're going to get on Wednesday, we're going to get pound sterling, okay, CPI data, okay, the inflation data, and also the MPC data on Thursday. So I would expect in the sort of 36, 48 hours before that news for markets just to go a little bit quiet as the main traders get ready to position themselves due to however it responds to that particular news. So some points that we've learned from trading the GBP over the years. I think, as I mentioned a little bit earlier, volatility is both a blessing and a curse. It's a double-edged sword. And so, as I said, when you're on the right side of volatility, that's great. It can be the wind in the sails that takes your trade towards its targets. If you're on the wrong side of it, it can make for a bit of a challenging session. My trading advice to that would be that if you are in a position and you recognise that there is a change in the volatility, namely that it has become either strongly against you, well then you're better to step aside, okay, and understand and work out what's going on, but also it might well be that you're on the right side, okay, in which case you can enjoy a ride to your target. As I said earlier, during those Brexit negotiations a few years ago, sterling was very sensitive to news. All right, any political news that basically would change the situation or change the positioning, that could lead to very sudden reversals in sterling. And what you would learn from that is that we like to be technical traders. We like to see charts, patterns on charts. But the reality is big news will always beat technicals, and that has not gone away. Even though there are fewer of those sudden reversals now, it should always be reminded that big news will always beat technicals, and you have to just be aware of that when trading sterling and any of the other FX pairs. What you will also find, for those of you who do trade the sort of intraday early morning UK session, is that most UK, well, not most, but most UK news items are released around about 9:30 UK time. So there will be some that are released at 7 a.m. Okay, some like the MPC on Thursdays at midday, but a good slew of them will be released at 9:30 UK time. So make sure, if you're an intraday trader, that you are out of your positions before then. Okay, you don't want to be caught on the wrong side of news-induced volatility. For those of you who like an early start, you might want to have a little look at, well, what are the differences between the 7 a.m. Frankfurt Open and the 8 a.m. London Open? Just be there, just have a little look at that, at the price action that occurs, okay, in sterling pairs, as I said, once Frankfurt opens and then once London opens. Just have a look at that. That might well give you just a sense of what kind of trading day we are likely to have. And if you're going to trade GBP in the afternoon, be aware of, well, what would once be called in terms of like the kind of the London fix. That might have differed a little bit in light of the some of the recent changes, okay, as we moved away from LIBOR, etc. But nevertheless, there will be elements of that that are still valid and still in play, and you might well see that in the price action between kind of, let's say, 3 o'clock, 4 o'clock UK time, if you're trading sterling. As I said, generally most sterling traders, okay, focusing sterling, most of their work is done in the mornings, okay, and in the afternoon they're either out or just managing positions, etc. There would be very few, let's say, active proprietary traders, okay, not filling orders for clients, but proprietary traders engage with markets. The majority of them will have done their business in the morning, okay, in the UK European session, as opposed to engaging in the afternoon. So, to help you, here's a very simple mechanical day trading strategy, okay, that you can take away and utilize if you're a new trader and you just want a little bit of something a little bit simple and mechanical to work with as you look to work on engaging markets. And this is just a pound sterling 60-minute chart, 8 a.m. breakout, and what we're looking for is work on the London Open at 8 a.m. So that'll be 0800 London time. I appreciate we have a global audience, so you would just need to amend that to wherever you are in the world, whether you're in Perth, Tokyo, Kathmandu, New York, or Bogota. Okay, just amend that to wherever you are. And what we're interested in the 60-minute candle that finishes forming on the British pound, okay, pound US dollar, at the 0800 London time. Okay, 0800 London time. So it's that hour between 7 and 8. If the range of that candle is 40 pips or more, then ignore it, because we've probably already had a little bit of expansion happening. There is no trade. What we are looking for is, if the range is less than 40 pips, then there is a trade for us. So what we'll be looking for is, as the name implies, we're looking for an early morning breakout. And so for buys, we'd be looking to buy at 2 pips plus the spread above the high of that 7 to 8 range, or for sell, to look at sell 2 pips below the candle, all right? And the stop is the 1 pip inside the other end of the candle. So for buys, the stop is 1 pip above the low, and for sells is 1 pip below the high. And what we're looking for is an initial target of between about 22 to 25 pips. That's what we're really looking for. And then some people will like to take all of their position off. Then some people like to take some of their position off. If you like to sort of peel out of your position, then you could utilize a 3-bar trading stop, because it might well be that might be one of the days where we see a strong trending day, and that will be the opportunity for you to use a 3-bar trailing stop in order to effectively to follow that. Okay, so as I said, that's a very simple mechanical breakout strategy that you could take away and work with. Okay, you might wish to tweak it, or you might look to look at elements of that, but as a very simple mechanical sterling strategy that you could take away and work with. If, as I said, if you're new to trading and new to trading sort of sterling assets. So there are, as always, just a couple of things you just want to be aware of. As always, there's always a couple of little caveats. What to be wary of is, just be wary if you are, in front of, okay, significant support and resistance levels, or pivot levels, or fib levels. You would also want to be aware about, or understand the whereabouts of the major moving averages that I like to use in my charts. I have a red 50 and a green 200. Why is that? Because I don't want to break out into those, okay? I think of those moving averages as kind of dynamic levels of support and resistance. So I don't want to break into them. Is it possible you can break out into them and slice your way through? Well, of course, absolutely. However, what we're looking at and understanding is, I want to basically just to have good breakouts that have the opportunity to run, okay, for a few pips, and just look for if there are particular candle patterns. So, is that 8 a.m. candle, the candle that has formed between 7 and 8 London time? Is it something like an inside bar? Remember, things like an inside bar is the rest before the surge. Okay, in an ideal world that we like to see that, a rest before the surge, because that's what we're particularly interested in. And if you want to go particular further, well, you might even want to sort of look at things like the 7 a.m. candle on the pound against the dollar, the euro dollar, and the pound yen itself. So, in particular cases here, just a couple of examples here. That's the candle that's the candle you are interested in. Okay, and we can see in this day, the next, as the London opened, it basically exploded out here. The candle Bush, we can see that was the particular candle we were looking for, and then invariably it broke out and continued its way down there. Okay, so but when there is a good move at the start of the London session, this is what we're particularly looking for, and looking for to be able to take advantage of that. So as I said, it's a very simple breakout strategy, mechanical, that for those of you new to sterling, new to trading, okay, might utilize for your own particular as an introduction, okay, as a introducing element. So just a couple of final points, which we'll have a little look at in a moment. We'll switch across to the charts. Is that, my suggestion is, build a profile for sterling. You might have your MT4, your MT5, your ActivTrader platform, and just watch how the GBP markets react on an intraday basis. Okay, do you see them where they move in unison? Okay, is there real correlation between how they are moving, or are they all moving separately, which might give you an indication that some of the another particular currency is the strong one driving the driving the moves. Look at how does price react at previous highs and lows. That is always an interesting element to take on board. When it did it create an opportunity? Take a look at how does the GBP react to UK news. As I always say to many traders, is that what you want to look at is, I'm not always drastically interested in what the news is. It is about how the market reacts to that news, and that reaction might be what helps us. And is there an afternoon reaction, okay, at the US Open, and also a little bit later on as they get towards what would have been the old London fix that was played out there. So I always like to give you a little bit of homework to take away, something you can utilize, and just look at effectively sort of building your experience and knowledge about this, in this case, and just trading British pound sterling. So, in conclusion, the British pound sterling, it's a popular trading instrument based upon London's location and the fact that it is still the number one FX location for the world. Traders like sterling because it's volatile, can have strong trends, and has good-sized moves. But it has also been sensitive to risk sentiment, and in the past was very sensitive to Brexit news. When it's trading, look to trade with the trend, okay, on a swing basis. When it's range bound, look for intraday reversals. You can trade the London breakout at 8 a.m. and it's very, very popular, okay, as a mechanical trading strategy. And just be aware that the most important UK news will come out at 09:30, but there will also be news out at 0700 and 1200 as well. So with that in mind, let's have a little look at sterling and basically the US markets as we open up. But beforehand, just a reminder that next Monday's Monday Market Matters webinar, 2:00 London time, what we're going to talk about there is your first trading routine. So if you haven't signed up there, just use the QR code there, use your phone on it to register your interest, okay, and bosh, off it'll take you in a way, it means to basically to launch yourself into that, to join us, just to understand, what a good trading routine is like to help you. Okay, so if you want to contact us, you can do. All right, if there is questions or feedback, you can contact the English desk, 0207 6500 567, or email them englishdesk@activetrades.com. Maybe you've got some comments or questions about this session, or maybe there are particular topics you'd like to see me cover in future ones. Please let us know. We'd be very happy to take that on board. Now, if you just wait for a moment, what we'll do is we'll just switch across to the chart. So just bear with me a moment, please, ladies and gentlemen, and we'll just do that now. So just hang on 1 second. Okay, so I'm hoping that you can still hear me. I'm hoping that you can see the charts. This is the ActivTrades platform here, one of them that I have access to here. And if I just bring up the drawing tool, I also have the British pound here, okay? British pound is my profile. So I have pound against dollar, I have pound against yen, pound against Swiss franc, euro sterling, pound against Aussie, pound against Canadian dollar, pound against New Zealand dollar, and the UK FTSE as well there. So, so because I'm interested in that because there is a relationship there between the FTSE and British pound sterling. So hopefully you can see that. And what I have there is, by having this kind of this sterling, this sterling profile, what it does is it allows me to very quickly get a take on, if there is a trend or whether there's a market consolidating, etc. And it gives me an idea of where I can see strength and weakness, and also to an element of if there is a risk on or if there's a risk off sentiment based upon how pound is reflecting against the Japanese yen and the sterling as well. So let me just let's clear these down, have a little look at all of this. So bang, let me just bear with me 1 second. I'll just set up here. So just talk about some of my trades from this morning. So in particular here, just please, I'm just moving these around here so we can we've had interesting moves here, okay? So what we had this morning here, pound against Canadian dollar, what we've had is, you can probably see that over the last few days, we have seen sterling weakness and Canadian dollar strength. And, this the 30-minute chart, as we've basically been just working our way down for most of the last week. And this morning, what we had was I basically, we blew out at the start of the session. So the kind of breakout would work, but actually what I was looking for trading is that for the turnaround here at the previous week's low. And basically that was the trade back up into the range. And then what actually happened is, as I said, the kind of longer term thing is a trend, and we actually had pulled back here. And then this gave you an opportunity to reverse into a short, okay, the pound against Canadian dollar, because we have the 50-period moving average is sloping down. It provides nice dynamic resistance, and there was a pin bar bouncing off that as the price sort of moved its way, as price has moved its way down. That's kind of changing now as we get into the US session, but as an intraday trader, you'd have had the breakout, okay, for a few pips, then the reversal here, which was my trade, and then the continuation of the trend, the longer term trend that you saw there. And so that was just a reflection of the pound against Canadian dollar. And what we saw was there was actually an awful lot of those swings occurring this morning on sterling. So pound against the Japanese yen was the same. Pound against Japanese yen has had some kind of wild moves, but it continues to slowly work its way down, but it's as you can see there's an awful lot of swings occurring, and that's what I want to see this morning on pound against yen. The yen played its way down to the previous Friday's lows here, where it actually reversed on the lower time frames, and that was my trade back up into the range. And then, just like the pound against Canadian dollar, what we saw was price come up to the 50-period moving average, put in price action pin bar there before price dropped its way down there. Okay, so there's as I said, there's moves on the breakout, and there's also moves on the kind of a trade setup I have called the Pac-Man, which is about basically reversing once we've basically pushed out of the range and trading back into the range. Remember, I said on an intraday basis I tend to be a reversal and mean reversion trader, but the pound yen showed that up, as did the pound against the US dollar, which once again has also been, like the pound against Canadian dollar, has been in a downtrend for a few days there on the 30-minute chart. And what we had this morning was price. Firstly, price bounced off that 50-period moving average, and price bounced down, and then it reversed, at Friday's lows and the previous week's lows, and that was where my trade was before running back up into the 50, and now we're moving down. And this is probably a good example here of as we're sort of opening the US markets on a Monday, we can see the price is just it's quite consolidating. It's quite range bound there, isn't it? It might well move down, but for that, we've had a couple of hours there. What's it, 1, 2, 3, 4, 2.5 hours there, really, of price going sideways. And that's why I said most kind of sterling traders are doing their business in the morning of the session. Okay, that's where they particularly look to focus. And just as a help, as an aside, okay, is what we've seen is, we've seen some the moves in terms of this is the chart for me on the FTSE, okay. So what we can quite often see is when we see weakness in sterling, we can quite often see strength in the FTSE because of the relationship between the FTSE's foreign the huge makeup of companies on the FTSE that basically derive their profits from their, let's say, their foreign operations, which means that basically, if sterling weakens, their profits look stronger. Okay, and yeah, that's what we've seen there. Even that sterling, that's nice. Is that this morning that we had, we can see it was consolidating. Okay, we actually had a false breakout bouncing off the 50. It was actually on the lower time frames was much nicer for us. Okay, and basically in the ways that it reversed its way off the 200 period moving average before moving its way down there. So as I was saying, when you see sterling strength, okay, you can quite often see FTSE weakness and vice versa. That. So there you go, ladies and gentlemen. Unfortunately, we're sort of just running out of time there a little bit. But what I want to do is to give you a good piece on sterling, and also to see how you can look at effectively the kind of the trading sterling here. This is just from early morning today's session. Okay, lots of swings there. Okay, on sterling that provided trading opportunities to trade reversals, mean reversion reversal, which is my preferred one, but also the opportunity, like I was showing on the pound against the yen and the pound against the Canadian dollar, it was like pullbacks to the 50 period moving average as part of a bit of a longer move down. So I hope you found that useful. I hope you found that insightful and helpful. That gives you a little bit of insight into how you could utilize sterling and trade sterling with your own efforts and endeavors. As always, I wish you the best of success in your own trading, ladies and gentlemen. Hope you have a fabulous trading week. Remember to join us next week, okay, for the session on your first trading routine, and have a great week. Okay, as always, remember there's a fair bit of data coming out on sterling. Okay, Wednesday and Thursday, so just be aware of that and take it as an opportunity to look at that. So have a great trading week, and I'll speak to you all. Cheers.